Hello, this is John Lee from expertcelebritystatus.co.uk. Today I'm with Jaidev Sharma. Jaidev, are you there?
Hello, hi John.
Hey Jaidev, thanks so much for coming on the call. I know your time is, again, really busy. And the purpose of this call is to teach people the most common mistakes when it comes to Forex trading. And I know, for those of you who don't know who Jaidev is the founder of knowledgecandles.com, and also he's been doing this for many years, and again made a lot of mistakes and made a lot of money doing this as well. So Jaidev, before we get into talking about some of the mistakes that people make when they're trading Forex or even lose a lot of money trading, why have you become so passionate about teaching people how not to lose money doing this?
Yeah, I think for me, when I started about 6-7 years back, I started as a novice trader, and what I learned over the years is that when you are on your own and you're trading against other professional traders, you need to understand how the markets operate and what sort of tools the professionals use. If you don't do that, then in all probability you will not have an edge, and in the long run you will end up losing money. So over the years, having studied a lot, having read a lot of books, and having attended formal courses, I have worked a system which can help retail traders like myself, who are not working for banks and these big trading houses, to actually not make those costly mistakes and get on to create a plan and get on to winning ways rather early on in their trading career than wait 6, 7, 8 years and make huge losses before they get on to making some money out of the markets.
I mean, it's interesting because I know we've got a whole list of mistakes that people make, and I'm just going to go through some of them, not all of them. And you say one of the biggest mistakes that people make is, and I love this term that you put here, is called revenge trading. I've never heard of that before, so let's talk a little bit about that.
Sure. Revenge trading. So what happens is, when you're trading the markets, sometimes when you lose money, you kind of get annoyed with yourself and with the markets.
Yes.
More so with the markets. So and the psychology from where this revenge trading comes is one of getting back at the markets. Getting your money back from them. So as a result, because you're operating from that mindset, you tend to take more trades when they don't exist, or you tend to take higher risk, which you shouldn't.
Right.
So the underlying psychology is to get your money back, and as a result, you end up making more mistakes and hence lose more money. Okay. So revenge trading, or operating from that mindset that somebody has taken your money and you want to get it back, is never the right kind of mindset.
Right.
Okay,
Is it a little bit like gambling, when people go and gamble in the casinos and they lose money and they just keep betting, trying to win it back? Is it similar to that?
Absolutely, John. So when you get into that mindset, what happens is that you tend to trade away from your plan.
Yeah.
Okay, so you take speculative trades, you take hunch trades, and you just jump into the markets without any thinking. And that is sometimes what happens is sometimes you'll get an odd winner as well.
All right.
and unfortunately, that's the problem. When you get an odd winner, you think you're doing it right, and the bad habit then reinforces itself, and you just over a period of time you just lose more, really.
Right. So interesting. I mean, that's and for a lot of people listening to this, I know some of you are very advanced traders, some of you are intermediate, some of you are complete beginners. Now, for beginners listening to trading, listening to you now, what advice would you give to them in terms of trading the markets profitably and with as least risk as possible?
Yeah, I think my biggest recommendation to the beginners is obviously any person starting in the financial markets, they have to educate themselves.
Yeah.
Okay, they have to understand how the markets work, get acquainted with the tools and techniques that are used to trade, get acquainted with the platform of the broker they open their accounts with. Now these are the basics. Okay, once you have the basic ingredients, just like if you give ingredients to make a cake to someone, not everybody can make a similar cake. Likewise, in the markets, you may know all the techniques and tools, and you have the account with the broker and you put the money in the account, you still need a recipe for success, and that recipe is the trading plan. So you need to develop your own trading plan which suits the markets you're going to trade in, your personality, your risk-taking capability, and so on and so forth. Once you have that plan, you need to execute it well. Okay, so my recommendation to beginners is that choose minimum number of markets that you want to focus on. Okay, understand them well. Then create one or maximum two strategies and test them well and see that they have an edge. Once you do that, then just trade with the minimal risk that you can take over a period of time. Develop a track record, and once you develop a track record and once you start seeing money flowing into your account over a long period of time, I would say 12 to 18 months, then increase your risk taking slowly and build it slowly.
Yeah.
Okay.
So it's interesting as well when you say building it slowly. Do you think a lot of people get into this because they think it's kind of like a get rich quick sort of scheme?
Unfortunately, the answer is yes. A lot of people get into it because it is so simple to set up these days. You can set up a trading account literally in 5 minutes over internet. You need very small capital to start, so entry barriers are small. Okay. However, what people don't realize is, as easy as it is to start trading, it is equally difficult to make consistent money out of it.
Right.
Okay. So yes, people do get into that. Also, partly because there are a lot of training companies and a lot of traders who act as mentors. They somehow send wrong kind of signals to people saying, oh, it is so easy to make money out of it. You can make thousands of pounds or dollars every day. Now that unfortunately isn't true, because in order to succeed consistently at any business, and trading is a business, you've got to learn the tricks of the trade, have a plan, and execute it well, consistently over a long period of time. Then only you can get success. It cannot be a get-rich-quick scheme.
Yeah, and I know, Jaidev, that this is one of the things that you actually have for people listening right now. If you're a beginner or even in intermediate and advanced, and you want to learn some of the tips and tricks and that Jaidev actually does to actually trade the markets on a consistent basis, I highly recommend you speak to him and just get some advice from him as well. Now, something you talk about here is you talk about watching the charts tick by tick for extended periods of time. I mean, why is this a problem?
Okay, all right. Okay, so see, if you're a full-time trader, okay, and you start your day at 8 o'clock in the morning, and you're looking at a number of charts on your screen. Now, suppose you are on a day when the markets are very slow, okay, and you're sat on your desk and watching the market tick by tick, tick by tick. Okay, so what happens if all of a sudden, because of some news somewhere or somebody speaking somewhere, if there is a slight movement in the market, it will appear to be very exaggerated. Okay, simply because you've been watching it for several hours, so sudden movement in the markets will appear as exaggerated, and therefore it can entice you into jumping into the market and taking a trade when actually none existed if you were to look at the bigger picture.
Yeah.
Okay, so people who are day traders or who aspire to be day traders, they can fall into this trap very easily, because they think that if they are sat on their desk watching the charts and they are day traders, they should be trading. Well, actually, they shouldn't be trading if their plan does not show them a trade. However, if you're watching it tick by tick, psychologically, in relative terms, you will end up taking those trades, and that's what I mean by that.
Yeah, and another thing to talk about as well. This is interesting because most people have heard of this, but they don't use it effectively. You talk about not having stops or moving stops to increase risk once they're in a trade.
Yeah. Okay. So when you're taking a trade, first of all, when you enter market to take a position, you should know the risk that you're going to take on that particular trade. Okay. Now, by risk I mean the amount of money that you're willing to lose on that particular trade. Okay. Now that could be guided either by your risk-taking capability and by the setup that you're trading. Okay. Now, If you either do not know that or you're not willing to put a stop, that means two things. One, that you are, if you do not know where to put the stop, that means you either don't have a plan or your setup isn't quite clear. Okay, then you should not be trading. Second is, you don't want to put a stop because you fear losing that money. If that is the case, if you're operating from that perspective, that you might lose this money, therefore you don't put the stop, then what will happen is, if the market goes against you and it goes near that point where you should have actually got out of the market, you will not, and therefore you'll end up losing more money than you should have to start with. Okay, see, the markets are not controlled by any one individual. Okay, they are a collective. Um, uh, they're a result of a collective participation of millions of people and very large banks and large account traders. Okay, so not having a stop, by not having a stop, you're exposing yourself to large amount of risk in case the market moves very quickly against you. Okay, having a stop is a safety mechanism by which you lose only what you planned to lose in that trade. Okay, you'll always get a loser. There is no trader in this world who has not lost a trade ever. Okay, so you've got to have that mindset that you will get an occasional loser and you should be okay with that. So not having a plan or not accepting the loss, both ways, you're making a big mistake.
What about, I mean, it's interesting because, a lot of what you're talking about now, Jaidev, is almost having the right mindset. I guess a lot of people, when they start trading, they think, oh, well, it's easy money, I'll just get in there. And they actually haven't had any sort of training on the mindset. And another thing, again, you talked about markets a second ago, is do you think there's an issue of people trading too many markets?
Oh yes, sometimes what happens is, again, it is quite true with the people declaring themselves as day traders and trading full time. What happens is that, suppose, like I trade 3 or 4 markets, let's say euro against dollar, yen against dollar, Aussie dollar, maybe gold. Yeah.
Yeah.
Now, on a particular day, none of these markets is moving. Okay, and I get bored, and I'm keen to make money. My month hasn't been so great, and I'm very keen to close my books with a positive trade. Yeah. So what happens is, I leave these markets which I actually know about and which I've been trading for years, and then I start looking for trades in something completely different. Oil or some stocks. There are hundreds of stocks on the stock exchange. Okay, so you start looking at other things just to find trade. So as a result, what happens is that you end up going into a market which you do not understand fully well. You do not understand the behavior as to how it reacts, how it moves, and end up taking a trade. Again, a wrong behavior, I would say, because if you do not know something very well, you shouldn't be trading that.
Excellent. So, I mean, I know that, again, we've got a lot to cover in here. We've covered a lot of information. And for those of you listening to this and you're thinking, my God, I really resonate with what Jaidev's saying, and I'm losing money, I'm getting emotional, I don't have the right mindset, I don't actually have nowhere to put my stops, I'm reading the charts wrong, I don't know when to get in, when to get out. If you're looking for someone to guide you through that, or coach you through that, or give you some advice on what's working for Jaidev, then I recommend that you get in touch, speak to him, because he'll show you what to do and what not to do, because after all, it's learning from experience. Now, Jaidev, if people want to know more about you, and they want to get connected to you to maybe get some advice, or just sort of find out what you're doing, where can they find you?
Well, I've got a website. It's called www.knowledgecandles.com.
Knowledgecandles.com. Okay.
Yeah, and there is contact details on the website, so I can be contacted through there. There is an email address, there is a phone number, and I'll be very happy to be able to help out anyone either wanting to learn trading or have been trading but struggling to get the right kind of results. I'm very keen, simply because I'm an average Joe Blogs who has started in this business some time back, has made mistakes, has learned a lot, and I would like to help people to go on that learning curve unscathed, without having to lose a lot of money. Really.
Excellent, Jaidev.